What's up, guys? So in this video, we're going to talk about Uber stock and why I am buying more because I am so excited at the changes that I've seen in the company and their latest Q2 quarterly report. So before I get into this, guys, please give this video a thumbs up. It really helps. So let's get right into it. Okay, so we're currently looking at a year-to-date stock chart of Uber to give you guys a quick rundown of what's basically been going on. The stock was basically, treading water. It's still been under IPO price the entire year, and then you had the pandemic sell off, and then it's kind of just it's kind of just hovered around the $30, $33 mark. And I think that this is a really interesting buying opportunity for several reasons that I'm going to mention later in this video. But I think the most important thing to understand is that Uber is not just a taxi company. Uber has changed so much even just since the recent IPO last year of $45. And you're basically able to acquire and purchase a company that's vastly different and vastly way more diversified and way more better suited in the long run for under IPO price. So I just think Uber right now is a fantastic buy, and I'm going to go into many of those reasons why. But the first thing I want to do is I want to talk a little bit about the ownership on Robinhood, and then go into the quarterly report and then give you guys where I think the stock price is going to be in the future. So let's get right into it. So if we head over to Robintrack, this is a site I like to use to track ownership in many different stocks on the Robinhood app, because Robinhood is a very popular app. You can glean a lot of information from robintrack.net. As you can see here, the ownership of Uber has been steadily increasing, and right now over 240,000 people on the Robinhood app own Uber. So Uber is definitely a popular stock, and a lot of people are believing in the company, even though it's been struggling to turn a profit. And I'm also going to talk about why Uber is not profitable a little bit later as I dig into those financials. But the first thing that I've been noticing is that Uber ownership has just been up a ton. So if you could just take a look here, just back at the beginning of the year, maybe just around 120,000 people owned Uber. So double the amount of people are holding Uber now on the Robinhood app, yet the price is at the same way. So there's definitely lots of support for Uber stock. I don't think it's a stock that's going to like substantially drop like some of these other stocks you've seen like Kodak and Fastly and things like that. There's a strong support base for Uber stock, and I think that the worst is behind us, and being the worst being a lot of the lockdowns that basically caused the mobility ride sharing business to basically lose the majority of their bookings, because people really weren't traveling, they were spending a lot of time at home. But I think that more and more people are starting to realize how big Uber is, and it's the 26th most popular stock on the Robinhood app. So this is definitely one of the reasons why I think we don't have to worry about the price substantially dropping anytime soon, that this could be the worst is going to be behind us. So let's move on to it and take a look at that Q2 report so I can explain exactly what I'm talking about. Okay, so as you can see here, Uber just recently announced their results, Q2, and they brought in around revenue of 2.2 billion, and that's declined on 29% year over year. Of course, obviously Uber is the biggest income source, revenue source was the mobility segment, which is the ride sharing, and of course that declined a ton. So let's just quickly go over the numbers. So gross bookings declined to 10.2 billion. That was down 32% year over year. But the bright spot is that even though the mobility gross bookings declined 73%, delivery gross bookings increased 113% year over year. So revenue was down, adjusted net revenue was down, and the losses were $1.8 billion. So right there, I think people are going to write off Uber as a bad investment, saying that they're losing too much money. And you do have a great point. Uber is definitely a loss leader, but the company is doing a lot of things to basically guarantee that they're going to cement themselves in our lives in the future and just become an indispensable business to kind of the transition into more of a digital-based society where people are spending more time at home and they're not necessarily going out and doing and running errands themselves. And I think that's a big point to understand, that in the future, you're going to be able to basically get anything you need delivered to your door within 30 minutes. It's just going to change the landscape. People are just going to be using their time more useful and tasks that can be outsourced, right? So things like grocery delivery, food delivery, package delivery, getting medicine at the pharmacy. All of these little tasks that normally people would have to, take time off from work or do during their lunch break or wait for the weekends. You will be able to get these tasks done within 30 minutes. So I think that's a big game changer, and this is going to deliver a lot of value. So I want to talk a little bit more about that right now. So let's just break that down exactly what we're looking at. So if we take a look here, we can see that one of the nice things about Uber is that they've removed over $1 billion in annualized costs, and they've reduced their research and development by $150 million. And if I believe the CEO, Dara, isn't even taking a salary this year. So the company has done a lot of things to cut those costs and help move towards profitability. So if we take a look at kind of some of these numbers here, we can see that we can see that monthly active platform users is down quite a bit. So that's one of the things that I didn't like in this report, that it's almost cut in half, and trips were down and gross bookings were down as well. But one of the, like I said, mentioned earlier, one of the bright spots is the food delivery business is way up. So if you take a look at this, you actually see that the mobility business, meaning the ride sharing business, is profitable. And what Uber is struggling to turn a profit with is the food delivery business. But food delivery is a little bit different, and obviously, Uber was doing a lot of things like offering free deliveries and things like that, and incentivizing people to use their platform simply because they were basically feeding America and feeding other parts of the world during the pandemic. So obviously, they're going to take a bit of a hit during the pandemic situation, but I think when things bounce back next year, you're going to see perhaps delivery become profitable, because right now, ride sharing is already profitable. So it's really delivery that kind of needs all the kinks ironed out. And then if we take a look here at gross bookings, we can see that there's a lot of potential in food delivery. I think food delivery is something that, if you would have told me, maybe like 5 years ago, that I'd be using food delivery a lot, I probably would have told you were crazy. And I did use Eat 24 Hours a bit here and there, but using Uber Eats, I think, is just is so convenient now, and things have changed so much. It's just so convenient. There's so many more restaurants available on the Uber Eats app. The Uber has signed up a ton of restaurants, hundreds of thousands, and heading towards 1 million restaurants all over the world have signed up for the app now. So when you have such a wide selection of foods to order, it really, really makes it just, a much sweeter deal to order some of the foods that you enjoyed as a kid, or just food that you like right now. It's so easy to do this on the app. And we know that the ride sharing business will bounce back. So it's down 75%, but we know that will bounce back eventually. People are going to start, riding, basically taxis and taking Ubers and things like that, in the future. But right now, people are just worried about the pandemic situation, so they're just a little bit cautious with their travel. But transportation will pick up, and doing 12 billion in bookings last in 2019, Uber will easily surpass that in the future. So this is just a short time blimp, and I don't think that this is anything to worry about long term. So now what I want to do is I want to talk a little bit about some of the new advancements that are going into Uber stock, and one of the reasons why I'm so excited about it. So as I mentioned earlier, the stock IPO'd at $45 billion. So basically you were buying a company that basically just had a strong ride sharing business. Uber Eats wasn't really developed. Their delivery services weren't really developed, and they've just added so many different things. So if you take a look at this, one of the interesting things is that they launched and expanded an hourly booking option. So it says, following the successful pilot of an hourly booking option in cities across Australia, Africa, Europe, and the Middle East, and expanding to cities in the U.S., the feature lets riders set multiple stops in hour-long increments to run errands, longer trips, or essential activities. So essentially, you're basically able to hire a driver for per hour. So this is another really, really useful service, because sometimes it can get expensive if you're just taking many trips here and there. Maybe you just want to reserve the car for a couple hours and handle all of your tasks at one time. I think this is an excellent, excellent service. And then also, they recently launched their software as a service business to kind of power local cities' public transportation. So this is another really profitable business. Uber is now in the software business. And then, as I mentioned, the delivery business has exploded. And one of the exciting things about this is that they've actively working with over 500,000 restaurants in June, and that's up 50% year over year. So it could be in the future that the Uber app around the world has access. Uber Eats app has access to millions and millions of restaurants, and it's going to be the best premium way to basically order food from your favorite restaurants. As you can see here, they've got many different types of restaurants: Domino's, Burger King, Baskin Robbins, and many other smaller restaurants as well. And then they've also, which is another thing I'm really excited about, is the grocery delivery, convenience store delivery, pharmacy, and prescriptions delivery as well. And active merchants on their platform grew to 100,000 people. And they also have a monthly membership where they have something called an Uber Pass and an Eats Pass where you can get free delivery and if you pay a monthly membership fee. And they also launched another business, Uber Connect, where it allows you to send packages to friends and families, and that's done nearly 3 million trips. So let's say, I want to send my friend, something, or I want to send a family member something really quickly, but I don't want to get in the car myself or get on the bus and deliver it to them, or send it in the mail and wait a couple days. I can just use Uber. So these are all new businesses that have been launched, yet the stock is still under the IPO price. So basically, you're able to get a completely different company for, under the public offering. I just think Uber is a phenomenal buy right now. And there's just so many interesting things in this report that should really, really make investors excited. As you can see here, of course, they also have Uber Rewards. That's surpassed 35 million people. And, just the business is just so different from when it first started, just over a year ago. So now I was talking about some of the changes they've done in their product offerings. Now Uber is quietly acquiring companies. So they acquired Postmates. They did that in a $2.65 billion deal. That'll kind of add to their delivery platform. Then they also acquired another stake in Corner Shop. That's what they're going to be using to do grocery delivery to compete with Amazon. And then they picked up Route Match, which will help them with their software as a service business. And finally, they acquired AutoCab. That is a English UK technology company that provides taxi and private hire operators with booking dispatch software. So when I mentioned, and if you guys follow my channel, when I mentioned that Uber is going to be the next Amazon, this is why I say it, because Uber is not just like Lyft, where they're just still the same company. Uber has acquired so many different companies and offered so many different services. And that's exactly what Amazon did. Amazon started out just selling books online. The Amazon of today, owning all these different businesses in many different sectors, and getting involved with cloud management services, involved with grocery delivery. Amazon now they signed up. They're working on a partnership with Simon Property Groups to turn, basically the retailers that they put out of business into fulfillment centers. So Uber is like the same thing. They're just transformative company. They never there's never a quarter that goes by where they haven't added something new. Okay, so basically this is what I was anticipating with Uber stock, and why I mentioned that I'm going to be retiring off of Uber stock, because I just understood that the company was mimicking what Amazon did, going into a space and completely disrupting it, but not just settling, acquiring other businesses and constantly launching new features to add more value to their customers. Uber is about serving people, and the same thing that Amazon did when Amazon first started out. They were just selling books, and I read a story about how Jeff Bezos basically, emailed his customers and said, like, what do you want to buy? And one person was like, oh well, I want to buy a tennis racket. And someone else was like, oh, I want to buy a blanket. So he just listened. Jeff Bezos listened to his customers and just kept serving them, kept finding different ways to serve them. And that's exactly what Uber's doing. They just started off with ride sharing as a way to get you from point A to point B. And now they're coming up with many different ways to serve you. And they want to be able to basically do everything for you for under 30 minutes. So they're going to be like basically your personal assistant, your personal concierge. And they're acquiring many of these companies as well while the stock price is under IPO price. So you're just getting a company that is just completely different from when it IPO launched at a discount. I think it's an awesome buy. And at this point, I haven't sold a single share of Uber since I bought it at the IPO. I've just been buying the stock every month on a consistent basis. And my long-term price target of around $600 a share, hopefully I will be able to retire off of this stock, just like a lot of people that bought Amazon stock about, I would say, 10, 15 years ago, they're able to retire too. So that's kind of my long-term game plan with Uber. So where I think the stock price is going in the long term, I still have that $600 long-term price target. Uber is a transformative company, and when they start turning a profitable earnings per share, this stock price is going to skyrocket. So that's it for now, guys. I hope you enjoyed this video. Please smash the red subscribe button if you like my content. Get more videos on Uber and other high growth stocks that can make you a lot of money. So that's it until next time, guys. Take care.